All right, friends, today is the day I'll be adding a new ETF to my stock portfolio. For the longest of time, I've really tried to simplify as much as possible my stock holdings. I used to have a lot of individual shares, then some dividend shares, and eventually decided to sell it all off and basically use all the money to put into the S&P 500, the 500 biggest companies in the US. And until this day, I'm still a huge fan. Now, having said that, of course, like any investor, we always want a bit more bang for our buck, so to say, slightly more returns. Now, the S&P really had stellar returns this year especially, but on average over the last 30, 40 years, anywhere from 8 to 10%, which honestly, given all the difficult times it went through, quite remarkable. And most people actually over long term, even professional investors, do not manage to outperform the S&P results. That's why I felt very comfortable with this. So while I'm still going to continue investing and dollar cost averaging my way into more S&P 500 ETF holdings, I decided to add another ETF to my portfolio with a slightly higher risk profile, but also higher returns. At least when I look at the historic results, it actually outperformed the S&P 500. So I can only assume that going forward, it may continue to do so, but of course, it may also not do so, right? It's a bit of a riskier position that I take there, knowing that I can get potentially higher returns, but also maybe not, right? So like anything in investing. Though having said that, I still think it's a much better way than putting all my money into an individual company where you really depend on that one company to do well. Here we talk about 100 companies. And maybe you figured it out by now which one I'm talking about. Yes, it's going to be the Nasdaq 100. So in this video, I'm going to explain you what the Nasdaq 100 is, how it performed versus the S&P 500, as well as which companies are currently inside of the Nasdaq 100, which ETFs you could consider in buying the Nasdaq 100, and of course, also show you live in the video how I'm buying my first shares in that ETF of the Nasdaq 100 myself. Right, so quick reminder of what the Nasdaq 100 index actually is. It's an index, right? First of all, that's the index. You can't really buy the index yourself. You can only buy the ETF based on the index. And the Nasdaq 100 is basically a stock index comprised of the 100 largest companies by modified market cap. We'll speak about this in a moment. So it's not just pure market cap, like the S&P 500, the more valuable company is, the higher it is in the ranking. And of course, they have to be trading on the Nasdaq exchanges, right? So similar like the New York Stock Exchange, right? Here we talk about the companies listed on the Nasdaq exchanges. So as the name implies. Now, while the index is very tech heavy, as you can see right now, it's almost 62% of all companies inside of it do have a tech background, but you still have some other ones: consumer discretionary, healthcare a little bit, industrial telecommunications, consumer staples, and then obviously the rest over here. One big differentiation, for example, to the S&P 500 is that it does not include financial firms. So maybe you don't like financial firms, well then could be very interesting for you. If you do believe in banks and other bigger financial institutions, well then probably it may not be that attractive. So that's a big differentiation here. And of course the major focus of that index on tech companies. So if you believe the future is going to be tech heavy, which, well, when you think about it, well, I can't see a world where the future is driven by consumer staples, industrial telecommunications, utilities, or energy. I believe tech is continuing to thrive and grow going forward. But again, that's just my personal humble opinion and one of the big reasons why I decided to add that ETF to my portfolio. So coming back to the modified market capitalization, it's really interesting, and that also includes special rebalancing. So basically, in a way, what they want to avoid is that one company has too much weighting, right? Because in the S&P 500, the most valuable company has a weighting, I believe, up to 7%. So 7% of the entire index is based on one company alone. And as the Nasdaq rules state very clearly, if a stock with a weight of more than 4.5% in the index collectively account for more than 48% of the index, then the index must be rebalanced. And honestly, I quite like it. This way you avoid a situation where maybe in the future you have one company that really outshines all the other companies, and you literally ultimately almost invest in one single company and they try to avoid it. You're still going to be ranked by market capitalization. So the more valuable company is, the higher the weighting, but they still want to sort of cap it almost, that is not one company overbearing and overpowering the entire index. So I think it's really a good thing. Right, so let's have a look at the companies that are currently making up the Nasdaq 100. And as you can see, obviously right now, you see some very familiar names, which is pretty much similar to what you would find inside the top 10 of the S&P 500, right? Because even the S&P 500 over time is becoming more and more tech heavy, because obviously tech companies are doing so well. So it's also changing over time. So in many ways, they have similar companies reflected here, but here obviously even more tech focused. So the top 5, top 10 is very, very similar to Nasdaq 100. You can see Apple over here, Nvidia, Microsoft, Broadcom, and the like. So really a number of companies. Costco, somehow one of the few non-tech companies I would say out there. But other than that, really familiar big tech names. Pepsi on 14 actually, that was quite surprising. But yeah, most of the rest can really see a very strong focus on tech, which once again, I'm a believer of, especially US tech, right? I can understand it, I can follow it, I use it myself. So that's why it makes sense for me to kind of double down on that. I still get exposure to pretty much all of those companies through the S&P 500, but to a lesser weighting, a lesser degree, because there are so many other companies in there, which is also good for diversification. But personally, I think some really strong companies in here. And if you go down, you see basically only up to 100 companies. Well, now it's 101, but more or less it's 100 companies. And obviously similar like the S&P 500, here also companies come in and out, right? Depending on the market valuation over time. So that's all done passively for you. You don't have to pick an individual company. That management is done through Nasdaq. And then of course, later on through the ETF provider that you choose to buy the Nasdaq 100. So the Nasdaq 100 is similar like the S&P 500. These are indices that you can't directly buy into, but you then select an ETF provider like BlackRock or Vanguard to basically mimic that index through that ETF based on the index, if that makes sense. And if you're in the US, it's very easy to buy. Basically, the fund is called QQQ. You just go on your stockbroker of choice, you put it in there and you can buy it. Now you could also go to stockbrokers like eToro, for example, and you could enter QQQ. You see it over here. I can just go ahead, click buy, and I could actually buy it. Even if I'm not an American citizen, I could buy it through eToro. However, I would not recommend you to do that because in most cases it's a CFD. Actually, as a European, for example, you wouldn't actually be allowed to buy that. So instead, you want to be buying a UCITS ETF, which also brings a lot of tax advantages. So you don't want to be buying the QQQ unless you live in the US. For most others, you're going to be better off buying the UCITS ETF because also you're going to have tax advantages there. So definitely that's what we want to be looking for. Right. And in order to find which ETF to pick based on the Nasdaq 100, there's a great website called Just ETF. Just go there, look for Nasdaq 100 in the search over here, and then you see the top Nasdaq 100 ETFs. And obviously you have different parameters that you can look for. The best in terms of total returns, the largest in terms of fund size, and the cheapest. So that means it has the lowest expense ratio. So it's up to you what you're looking for. I always like to look for an ETF with a big fund size because a big fund size means that obviously the fund is doing well and the chances of it being continued in the future are much higher than if you pick, for example, a fund, an ETF that is very attractively priced, has a very low expense ratio, but also a low fund size, meaning the fund may decide one day to actually shut down the fund because the size is too small, meaning their fees are too little, what it generates for them in income, and they might decide to liquidate it, and then it will take you a while to get your money back and so forth. So I always like to have a fund ETF with a big fund size. So I look at the largest over here. Let's go into it. And you see here the ones that are relevant. All of them are UCITS. So that's the one we're going to be looking for. And of course, here you have a couple of choices to make. Now, first of all, you see the fund size. So the biggest one is the iShares, which is from BlackRock, the Nasdaq 100. It's 14.4 billion euros fund size. So rather large, I would say. The second biggest is only half of that, which is the Invesco. And then you have those slightly smaller, still big, 3 billion is still a lot of money, but definitely significantly smaller than some of the other ones. And then of course, you have a choice between accumulating and distributing. Now for my S&P 500 holding, I currently have a distributing ETF. Basically, it pays me out a quarterly dividend and I quite like it. It's still small, but at least around 1.4, 1.5. So after a while, once my portfolio grows, you start seeing that income and it starts getting a bit more attractive. Versus with the Nasdaq 100, the dividend that it's paying is actually really tiny. If I go, for example, into the Invesco EQQQ, so that's the one we looked previously, the QQQQ, but E in front of it. So that's the usage version. So if I go into dividends over here, you see the current dividend yield is 0.4%. So most likely you're also going to be paying withholding tax on that. So what you literally being paid on a quarterly basis, unless you have a huge $1 million portfolio in that, it would be very, very small. And that's why for me, in this case, I would actually prefer going with an accumulating ETF. So I don't have to worry about reinvesting the dividends and it's all done for me. And you can see obviously also the biggest one of those ETFs is accumulating. So it means most people going that way. And once again, confirms why that fund is so big, because people like it. Even though in terms of fees, the most expensive out of all of them, of course, some of them try to undercut it and you can see they're significantly cheaper. But then again, yes, I could go with AXA, but the size for me is too small. It's 1 billion. It's still not bad, but still I wouldn't be too comfortable with that. And in this case, I actually prefer paying a little bit more, knowing that the fund is doing well over time. And obviously I'm investing in it for superior returns. So those small differences in fee for me are quite negligible, but I understand if you really want to get the cheapest one, you may want to choose one of the other ones out there. But also keep in mind, not all of those gonna be listed on your stockbroker of choice. In fact, when I went through the list, very few actually are listed. Now, also what has to be said, it depends on where you want to buy it and in which currency, right? So looking at that, basically, I know I want to go ahead with the biggest fund size to know that my money is safe in there for the long term. So I'm going to go ahead with the iShares Nasdaq 100 accumulating, meaning they automatically reinvest my dividends in there. So that's why you don't see any dividends listed here, because the dividend is basically reinvested automatically by iShares, and they just buy more shares with that money on my behalf. So it's really all done on autopilot for me, which is nice to see, of course. Right, and when we go down to the stock exchanges where it's listed, you can see different ways how we can buy it, right? Depends on where you want to buy it. You want to buy it in Germany, in Switzerland, in London. It's really up to you, and also the currency, which currency you want to buy it in. Now, in my case, I like to buy things in London. That's where I buy my S&P 500 as well. There's no right or wrong. It's just how I started. Usually you can buy it in dollars there. That's why I like to buy in London as well. So in my case, I would just go down to London over here, London Stock Exchange, USD, and then I see the ticker symbol CNDX. And basically I would take the ticker symbol, put in my stockbroker, and then I can start buying that specific one. But make sure your chosen ETF is actually listed, because as I said, a lot of them are not listed. In fact, even the one I want to buy is not listed on Interactive Brokers, which is one of the biggest brokerages in the world. They don't list that particular one. At least in my case, I couldn't find it. So I'm going to be using another broker to make that particular buy. Right, but before we go into actually buying that ETF, let's have a look at the performance and see how it did vis-a-vis the S&P 500. You can go also, of course, to iShares on the website through BlackRock, and you see all the details you want to know and so on, the performances, when the fund was first created. You can see here 26th of January 2010. So you get all these key facts that you want to know. But we're interested in the performance since it launched. And for that, let's go over to TradingView, and you can see over here the two lines. The red one being the S&P 500 and the blue one being the Nasdaq 100. And well, what can I say? We're looking at here from around 2012, so around 12 years of history. And well, while I'm super happy with the S&P 500, which is basically this ETF over here, the SPY 5, which I'm buying in US dollars, returned me over that period 268%. Really great performance, market returns, really happy with this. But if I would have invested the same money over the same period, I would have had almost 4 times the return. You can see here 844% for the Nasdaq 100 over the same period. So absolutely demolished the S&P 500. Now, of course, I always say history is the history. That does not predict the future, right? The future might look completely the opposite. Having said that though, at the same time, S&P 500 is only becoming more and more tech heavy as tech continues to grow. So I believe in the future, we're still going to be seeing the Nasdaq outperforming. That's on the upside. But at the same time, it also means once we maybe have another recession or financial crisis or what have you, when the markets will go down, which will inevitably happen, as it always will. Markets are in cycles, right? I think we're going to see a bigger correction in the Nasdaq 100 to the downside. If, for example, the S&P might drop by, let's say, 20 or 30%, the Nasdaq 100 might drop by 40, 50%, right? So much more painful, but of course, also higher upside. So I think in both ways, the swing will just be larger. But given that long term, I believe we're more on an upward trajectory, I think long term, my overall gains will also be more. So that's just something everybody has to make their own call. It's not a buying recommendation. It's just how I sort of thought about it and how I see tech going forward. I believe it's going to play a fundamental role in our societies going forward. I don't think we're going to get less tech heavy in the future. I believe society is only going to get more tech heavy with all the AI, autonomous driving and flying and what have you. So I don't see a world where Pepsi and Coca-Cola is going to be the most valuable company in the world. Instead, we're going to be looking more and more at big tech players out there. Right, so now I've done my homework. I know what I want to be buying. I know why I want to be buying it. And I know exactly the ticker symbol of which ETF I want to be buying. Now the question is where I'm going to be buying that. So as I said before, I want to be buying that particular ticker symbol. So I would just go, for example, into Active Brokers. And if I copy paste it into here, well, unfortunately, as you can see, I only have 2 options. I can either buy it in Mexico or in Canada. None of the options that I want. I don't see, for example, London listed over here, which is really a shame because I would have considered buying it over here. They do have some other Nasdaq 100 options listed in here, but not the particular one that I want to be buying. Now, I did find it also available on both Lightyear and Trading 212. So if you're using those two brokers, you will be lucky and you can buy it over there, that particular ticker symbol. And again, you might look for a different currency. I believe Lightyear and Trading 212 also feature the same Nasdaq 100 in euro currency, so you can buy it there as well. But in my case, I just recently opened a new broker with eToro. And I will make a deep dive video on why I like eToro and started using it more and more, as it has a lot of great features. But one of them is actually the more you deposit and your portfolio grows, you can actually get a higher club level membership. And with this comes a lot of benefits. And yeah, as I said, I'll speak about it in separate videos, but that's why, of course, I'm really interested to have a higher portfolio of my own money over there, because then I'll get some nice perks in return, which you don't usually get with other brokers. So all things equal, I think that makes a really compelling case to go with eToro in this case. If you want to check out eToro for yourself, use my link down in the description below to open your account. And once you've done, if you have any questions, you can DM me anytime on Instagram. I'll be happy to help you out with anything you need or any questions you have about the platform. Right, so here we are inside my eToro dashboard, and all I have to do is basically look for that particular ETF. You can see already here, I searched for it previously, so I have it here, CNDX, and then you see .L, so it indicates it's listed in London. So let's click into this, and then I see right away it's listed in US dollars, the Nasdaq 100 UCITS ETF, and USD. So that also means I actually own that particular ETF. It's not a CFD. You can buy a CFD, I'll show you in a second. But in this case, if I buy it without any leverage, I'm actually owning the underlying asset. And that's very important. A lot of people think if you buy on eToro, it's only CFD. No, you actually buy the underlying asset if you buy the UCITS version and you don't use leverage. So what I want to be doing is click on trade over here. And of course, you can do the same very easily on the app. The app is really amazing. So it's up to you. But since we're on the computer, let me show how it works over here. And from here, it's very simple. Basically, you could also short. And again, I'll talk about it in a separate video, but you can basically bet against a particular stock or ETF. But in my case, I want to bet on long-term price appreciation. So all you do from here is click how much, the amount you want to put in. I'll put the amount $500, and for that I get 0.42 shares. And that's the beauty also eToro offering fractional shares. Not all stockbrokers do, but here I can get fractional shares because one share otherwise costs $1,100, right? It will be too much for the money I have right now in my account, but here I can buy fractional shares, which is really very cool. There's not going to be any commission on it, which is really nice. And here you just want to pay attention not to have a stop loss. I mean, unless you want to have a stop loss. For example, if you lose a certain amount, it automatically closes your position. But in my case, I don't want to have it because I'm a long-term investor. And you can also have a take profit, meaning as soon as I hit a certain profit, it will close my position and materialize the profit. By default, that's enabled. So make sure, unless you want to have it in place, to click on no take profit. Otherwise, you might be surprised if in a year, 2 years, if it continues to grow and you hit that profit number, your position will be liquidated. So in my case, I like to have no stop loss and no take profit. And here also, you want to make sure your leverage is X1. So that basically means you have no leverage, right? Because one-time leverage is you just use your own money. Now you could, if you want to double down and take a more risky position, have a 2x. So basically with my $500, I will be buying worth $1,000. So basically in a way, eToro gives me a loan, so to say, to borrow money from them to invest even more. But that really quickly gets tricky. It's great if it works in your favor, but if the market turns and you lose money, it's just not for me. I'm a long-term investor, more on the conservative side. So that's not something I want to be doing. So I keep it at 1x over here. And then once again, you see what it is. You can also change the order type. You can have a limit order, but I want to have a market order to just execute the order right then and there. I can see here my cash position, how much I have available. So that will cover the buy. Right. And if I'm happy with this, all I have to do is click on buy and boom, I just bought it and it has been added to my portfolio. So if I go now into my portfolio, you will see there we have it. I'm a long position, not shorting, but long. I now own the position. And you see here, I'm now down 15 cents, 20 cents. That's basically the market spread, right? Because I had a market order. So that's the difference between the bid and ask price. So for me, that's a really tiny spread deviation. In fact, if I would have bought the same on interactive brokers, let's say they would have offered me that, I would have paid $1.80 in commissions, right? So in that way, I'll be way worse off. Maybe the spread is slightly better, but in fact, my total expenditure would have been higher. So in that way, I'm actually better off buying it through eToro. And that's what I plan to continue going forward. So my idea is to invest into both of those every single week. I'm still not 100% sure about the split, maybe 50-50, maybe 1 week. If I see one of them doing better or worse, obviously worse, then I will buy one over the other. So I still have to work out. Obviously, I'm still far ahead in terms of my S&P 500 holding. And I also plan, to be honest, to have the S&P 500 as my main base, because long term, I think it's the better way to be diversified across different industries and not only rely on tech, even though personally I believe tech will continue to do better. I think it's just a hedge that if one day I need money, right, and we are in a downturn market, at that moment, the Nasdaq will definitely be more impacted than the S&P 500. So yeah, it's just, again, a question of diversification. I'm already quite concentrated in the US, and I spoke about that in many different videos, why I focus so much on the US. Some of you may not like such a focus on one country, and you might want to have a global ETF. That's totally fine. There are also global tech ETFs. So I can talk about it in future videos if you want me to. Let me know in the comments down below. So yes, I'm really happy after thinking about this for many months actually. In fact, I never pulled the trigger, but finally I decided it's time to add the Nasdaq 100 to my portfolios. Overall, my investment strategy hasn't changed. My 3-pillar strategy still consists of real estate, Bitcoin, and ETF holdings. Just inside the ETF holdings, I now have S&P 500 and Nasdaq 100. So overall, I still think it's very simple. It really works for me. I can set it and forget it on autopilot. And yeah, it just continues to grow over time. My portfolio has been doing very well. I'm really happy with the returns. And hopefully now, with that addition, I will just have a little further boost to my overall returns. But I'm interested to hear from you. What do you think about Nasdaq 100? Are you planning to invest in it? Did you already start investing to it? Let me know in the comments down below. I'll get back to every single one of you. Next up, check out this video here. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.